Jordan Perry here, founder and CEO of SimpMe. So it's been a while since I've made a YouTube video. Been working on a lot of different things behind the scenes with the SimpMe team, and there's a lot in the works. But it's great to be back talking to you guys about all things financial literacy. Before I get going, if you're not subscribed to our YouTube channel, be sure to make that happen. Click the link. We have a lot of great content coming, a lot in store, and you guys won't want to miss out on all of this new content engine and all the different ideas and perspectives we'll be sharing on the channel. Also, if you're interested in learning more about what we do at SimpMe, head over to our website at www.simpme.com. You can explore some of our unique offers like our digital course, Unlocking Financial Mastery, or you can learn more about our SimpMe Wealth Management division, where we help individuals develop personalized one-on-one financial plans for them to get financially fit. So if you want to book a call with a member of the SimpMe team, you can do that at www.simpmeoffers.com. And we have a lot to offer to you as you get financially fit with us. So today I wanted to come on and talk a little bit about the idea of inflation, right? Inflation being the silent killer that a lot of people don't really know about, or they just don't talk about it often, right? And I want to explain to you how inflation is a silent killer, and also how a lot of individuals don't understand inflation. So by not really having a full comprehension of what it is and why it's detrimental to your long-term wealth accumulation, they end up keeping money in bank accounts. And then after that, I'll go into some solutions that you can follow or pursue and educate yourself on to help you combat inflation. So for starters, what is inflation? Inflation is essentially an economic factor that results in the cost of things increasing, prices of goods increasing, etc., just due to normal market occurrences. But when inflation increases the prices of these goods, that in turn means that the dollar amount that you have in terms of your earned income is buying less, right? So if you think about the current situation that we're going through right now, we were in an environment where interest rates, right? Interest rates were low for so long. They were low for so long, especially during COVID. Interest rates were low. And the reason why the Federal Reserve made interest rates low was to essentially try to stimulate the economy during COVID because of the pandemic. The pandemic ended up having a lot of negative effects on the economy, but the Federal Reserve felt that the only way to keep the economy stimulated was to keep interest rates as low as possible. However, when interest rates are very low, that in turn causes individuals to spend more money. And when people spend more money on buying cars, buying clothes, buying gas, buying consumer products, you name it, that in turn increases the prices of those goods. So that's a normal economic factor that happens. When interest rates are low, people are spending. When people are spending, the economy is stimulated. When the economy is stimulated, if interest rates are kept too low for too long, that results in increased inflation. So these inflationary pressures, we've been seeing them, right? If you go to the supermarket, the cost of everything is expensive. Eggs may be more expensive than normal. Gas is very expensive. Milk is expensive. You name it, right? Due to inflationary pressures. However, what the government and the Federal Reserve has been doing over the past few years, post-COVID, is they knew that they had to raise interest rates. The reason why they raised interest rates is to combat inflationary pressures, right? So when you think about it, right, if you know that you're earning money from your earned income, from your job, and you're keeping that money, in a traditional savings account, the cost of everything around you is going up. The key, though, is that your money sitting in a traditional bank account is not really generating a return, right? So with that being said, when your money is just sitting in your bank account, not earning any interest, because banks don't typically pay a higher interest rate, unless you have a high yield savings account, which is a whole separate conversation. I'm going to make a video discussing the benefits of high yield savings accounts as well to break that down for you. But if your money is in a traditional bank account, your money is essentially losing value day in and day out due to inflationary pressures. And this is just an occurrence that happens. And I believe that because a lot of people don't understand this, they'll say, well, I'm saving my money. And when you say, okay, well, what are you saving? Are you saving in a high yield savings account or a higher yield investment vehicle? And they're like, well, no, like it's just in my bank account, like I'm saving, not really knowing fundamentally they're losing money due to inflation, right? So hopefully that makes sense as to why inflation is detrimental and what inflation is. And if you're a little confused with it and you want to learn more about inflation, you can check out Stan, which is our AI assistant. You can access Stan by being able to leverage our course, which you can find at www.simpme.com. And if you sign up for our course, you'll have access to Stan. Stan is very beneficial because you can use it to ask questions about financial terminology and you'll get analogies. So we use some really interesting technology to make Stan powerful as a beneficial resource. So check that out if you want to leverage that resource to learn more about inflation or any other finance or investing topics that you're trying to break down. But the key to understand with inflation is that it's one of those things that's going to always occur. But you have to understand how you can combat inflation by leveraging other investment vehicles. Now, understanding how the banks work and how they operate, right? You as an individual can leave your money in a traditional bank account. And when you do that, by leaving your money in a traditional bank account, you are in turn not earning any interest on that money. And the interest that you may be earning is so small and so nominal that it's kind of disheartening, right? But you have to understand though, the banks are essentially using your money that's sitting in the bank account to give you a small, tiny amount of interest, and they're taking your money and then they're loaning it out to individuals to go buy a house or car loans or auto loans or you name it, or they're loaning the money to other banks and they're making a spread on that, right? So fundamentally, when you understand how inflation works and how also you leaving your money in a traditional bank account, that the bank is essentially using your money to loan it out to individuals to make a huge spread on it, whether they're giving someone a mortgage. And we know what the rates are on mortgages and loans and credit cards, etc. They're allowing all these other individuals to leverage your money and they're making a spread, but then they're giving you a tiny percent of interest back. Let that sink in, right? That's what happens all the time. So when I hear individuals say, well, Jordan, I'm not investing, I'm just saving. It's like, well, you're really losing money by keeping your money in a traditional savings account and by not understanding how inflation is actually a silent killer that's causing you to lose money day in and day out. And when I see individuals do this for long periods of time, it becomes disheartening. But what we're here to do at SimpMe is to educate you on financial literacy, to allow you to feel more well-informed to make decisions to live a financially responsible and lifestyle and to get financially fit. So with that being said, now transitioning to solutions, right? There's a lot of different things that you can do to combat inflation. There's high yield savings account, which I mentioned earlier. There's a lot of companies that offer high yield savings accounts that are, they'll give you a higher interest rate compared to a traditional bank, and the money is readily available. You can access that capital like you're essentially using any other bank account. It's just that it's not in a traditional bank account that's paying you small amounts of interest. That's one solution. Also, understanding investing, right? Investing a little bit of your money day in and day out. When you get your weekly check or bi-weekly check, however you get paid, investing in assets, investing in the stock market, investing in other areas of business, whether that's real estate, right? Because at the end of the day, your money sitting in a bank account is just not good enough. You're going to lose money every day by it sitting there due to inflation. The bank's going to continue to use your money to loan it out to individuals and charge them interest rate and then give you a small amount of interest. And that's going to continue to be the cycle if you don't learn more about how you can make your money work for you while you're working your job, while you're working your 9 to 5, right? It's so important to understand this. And that's what we're here to do, is to educate you, to keep you informed. So with that being said, there's a lot of different things that you can invest in. We break a lot of this down in our SimpMe platform. If you go to www.simpme.com, you can check out our free SimpMe toolkit. And you can also go to www.simpmeoffers.com to learn more about our other additional products, to book a call with a member of our team to learn more about investing, right? We work with a variety of individuals, professionals, teaching them about how they can invest in the stock market. And we have a unique way and methodology that we use to make that simplified. And it works, it's very effective. And at the end of the day, I'm not talking about anything that I'm not doing personally. I've been fortunate to be surrounded by individuals that have poured into me and taught me about financial literacy. My parents taught me about financial literacy. So this is something that I'm extremely passionate about. But my goal with SimpMe and what our goal is at SimpMe with my team is to bring this knowledge to the masses through our platform to allow individuals to live more financially responsible lifestyles. So at the end of the day, in a nutshell, I hope that this makes more sense, understanding how inflation is a silent killer, understanding why your money just sitting in a traditional bank account is not good, and some of the alternatives, some of the solutions that I've provided with you, recommendations that you can read more about to understand how you can make some better financial decisions. But if you want to learn more, head over to our website. I'll drop the links below, and you can learn more about how you can work with a member of the SimpMe team and work